The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, the soybean market on Thursday gave back some of this week's gains. The wheat market found a little pressure. Corn, though, was fairly quiet around unchanged. Got some outside market headwinds with a higher U.S. dollar and more seemingly playing a little bit of a role anyway. A few other things to watch in the trade. We're going to talk about what is going on in the markets here as we're getting close to the weekend. Joining us now, happy to have him back with us, Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, always great to chat with you, sir, and I hope you had a good holiday weekend. And, we're almost to another weekend already in a fairly quiet market trade on Thursday overall in the grains, Bryan.
Yeah, and it piggybacked after the holiday. There was a lot of, I'm going to say, hope that as hot as it was and dry as it was, that the market would add some weather premium into crop expectations. And if you didn't know any better, there wasn't any hot or dry when you look at the price. But there's those other headwinds you talked about. The dollar keeps moving higher. And I think when you look at something like the bean market, it did have a run on the extended forecast a couple of weeks ago, put its high in, and then tailed off last week with the hot weather in front of the 3-day weekend. We're kind of hopeful maybe the market bounce right back. Well, it didn't. It was up yesterday, but down today, and not a lot of rhyme or reason that I could find. I think traders are the funds are long coming out of traders over 90,000 contracts. So there's some thought that they're just too long for this time of year harvest window. USDA report. Do you bet on the USDA lowering yield enough? I don't know. So kind of an interesting day that it was down, but it might be as simple as this. This week, I talked to a farmer, and he said, this is what I did. I said, I'm going to store my corn, and beans are closer to the high for the year than the low, and corn is closer to the low than the high. So I sold soybeans this week. And I got to wonder if farmers didn't step up and sell a little bit more heavily, anticipating that they'll make room for corn.
That's a good point you made there, Bryan. I've heard a little bit of that anecdote myself with traveling to the Farm Progress Show and more here the last couple of weeks, and hearing some of that same sentiment. Farmers thinking, you know what, we're going to sell beans off the combine and store corn, so to speak, for lack of a better way to put it. And I think you're right there. Tighter balance sheet in beans. We could maybe try to get bullish here, but then again, who knows what USDA is going to say next Tuesday. And next thing you know, soybean market could pull back even more. So it feels like a 1350 mark in November beans, pretty decent level if you're looking at your balance sheet and it all makes sense, Bryan.
Yeah, it's kind of the way that you want to look at it. There's just different angles. So the bulls, if you're bullish beans, you look at this projected carryout and you take a drop of 1 bushel, and it's huge. It's a huge percentage change. You go from roughly 240 million to 160 million. Huge change. That's a 33% change in projected carryout. So that angle could be really bullish. On the other hand, the world seemingly stays hand to mouth in commodities, continues to devalue row crops other than beans, and the market has to chew through these inventories. The bigger crops out of the southern hemisphere that's probably the biggest story of the year. The second biggest story of the year is China's rough economic conditions and lack of expectation that they'll kind of buy at all costs. And then the third story this year so far is obviously the wide variety of weather this crop has experienced. And yet, the common theme among farmers is as they walk their fields and go, I just don't know where this potential is coming from. We just haven't had the rain. So testament to maybe great genetics, good farming practices.
Well, and to your point about what's going on with the weather, I've heard the saying start to creep in here. This crop is dying down, not drying down, and I think that is interesting. I'm hearing some anecdotes from farmers in parts of, say, Iowa, et cetera, where crop conditions aren't looking too good. So, Brian, I mean, what's your take on that aspect? It feels like this crop early harvest is in front of us, especially corn. It feels like it's just kind of dying down, not necessarily drying down right now.
Right. When you die down, typically that has some impact on test weight. Anecdotally, talking within our company to a large number of farmers, and they talk to other farmers or contacts, and what we're hearing is a theme of really mixed results on silage chopping so far, where some of it's been appraised lower than farmers thought, some higher, but very variable. So timely rain seemed to be another theme this year, that if you were in some spots, get the right rain at the right time, pretty good crops. If not, things might edge on the side of a little bit less than what you think at this point.
As you're thinking about the upcoming WASDE report, especially on this corn side, demand continues to be such a problem for U.S. commodities, especially corn. And I have to think that depending on what USDA gives us for September numbers, that yield number would have to come in well below a 170, I think, to really do any sort of movement in this corn market, Brian.
Yeah, unfortunately, to really sort of change the momentum, you're right. You need something pretty big and pretty quick. Otherwise, it's probably base building. It's probably more sideways trade. It is more of the same that we've seen already. So, for instance, corn is priced today where it was 3 weeks ago on the futures, same price. So back and forth. That's what bigger inventories do. So you're looking at 2.2 billion bushels of carryout right now. And, you do have to drop yield substantially to kind of get away from that 1.8 to 1.9 billion, 1.8 to 2 billion. I just don't see the end user jumping through hoops to get it bought right now. And then complicating the issue, kind of on a different vein, is low water levels. And what does that look like? Even if you had importing countries buying, can you get enough of it down the river fast enough? So it's unfortunate that we go back the last 3 years. I've used that language. We talked about it a lot, of connecting all these bullish dots. You could kind of connect them, and you got another one and another one, and you have this big long-term uptrend. Really, the last year and a half, it's been connecting the bearish dots, and they continue to surface. And that's, that is a sign to end users and speculators. End users to buy as needed. Speculators, don't jump through hoops to get long the market. Sell the rallies.
Very good point. If I'm a producer here, I'm getting ready, I'm gearing up for harvest. Some folks already started. Obviously, we got this big report coming up in front of us. We got the end of the month of September, the updated quarterly stocks numbers as well. So, I mean, anything different in your view with the marketing plan? Anything that folks should be thinking about one way or another here? Quartered soybeans right now, Brian?
Well, I'll start with soybeans. I think we have to have a balance in soybeans, because it is okay to be bullish soybeans, but it might not be okay even at this push lower here in the last few weeks. We're still at 1360. We've been running to resistance at 14. So the balance might be to say, hey, I still need to hedge or market some beans. I need to move beans. So you hedge, retain some ownership with probably fixed risk options. My option of choice would be the bull call spread, where you buy a call, sell a call. It's fixed risk, fixed profit as well. But that's a way to keep things balanced. What always is concerning to me is the bean market. It can have friendly news, but it still can drop $1 without rhyme or reason. That's just the nature of beans, the speculative interest, just as it can rally. So I'd like to go in that with a balanced approach. In the corn market, boy, it's really tough to sell cash here, especially if you have some of these higher insurance levels. There's no reason to sell it. Now, if you're at a 75% coverage and you have an average yield, the market's still trading above where in a potential indemnity would pay out. So in that case, if you're light on sales, you really got to kind of take a look at what's being offered basis wise and whatnot. It might be a good year to, if the basis is firm, go ahead and lock a basis contract. We expect the basis will likely widen out in the next several weeks as harvest kicks in. Um, do we own corn here? Do we buy it? I think end users should buy it. I think it's you can buy it for less than the cost to grow, and we don't know what's out there yet. So we should be buying. Um, but from a producer perspective, you're going to really have to kind of search whether you want to sell or put it in the bin and see if we can't get some better values, in particular if you're well below your insurance level, right?
Good thoughts there for sure. We're talking with Bryan Doherty with Total Farm Marketing here today. Bryan, let's go over to the livestock trade. Solid day in cattle and hogs on Thursday. Not a lot of cash cattle activity, though, for this week yet. Curious your thoughts here. It feels like that maybe traders are running up this futures board a bit in cattle here ahead of some anticipated cash activity this week. I don't know. Curious your thoughts of this cattle market first.
Yeah, kind of on the surface, kind of an odd thing. All of a sudden, we get a push in futures here the last 2 days, which I think would be reflective of the weather of the last 2 weeks, where it's just been not great for weight gain. Makes some sense. I'm surprised the market didn't do it before the weekend. Weekend's now behind us, so grilling season is maybe an ember. It's out there, but it's not. Typically you're not gearing up for that. Do it back to school. The bottom line with the whole cattle complex, when I say cattle complex, the live markets, the feeders, it's a very big fundamental supply story, and that is just a small cow herd, and it leaves the market vulnerable to flash rallies like this, the last two. All of a sudden the market takes off. Well, why? Well, because the perception is we have a limited supply as far as we can see. So if there's some expectations for better demand, or the speculators just decide to jump in and want to buy the weather, you get days like the last couple of days. You get surges in the market. Bear markets and grains are often the other way. You just can't get a thing to rally, and it drops out easy. So it's a supply side. Feeders are tight. We continue to talk to farmers or feedlot operators. They're just tight numbers, and that's not changing anytime soon.
I think I can rope hogs into this as well here. I think the overall assessment of what was our Labor Day demand at retail and kind of restocking some of those shelves. And you mentioned kind of the ember of grilling season here left, Bryan. I think that's part of the equation too across this protein complex this week, is kind of assessing some of that domestic demand here in the market right now.
Right. And we kind of keep thinking, well, the market, had this big bearish key reversals and flat out sideways for a while, that it just seemed like it was tired and it did need some sort of catalyst. Maybe the weather was the catalyst, but holding together well. I think puts are for me, the tool of choice. They've been that for a while, trying to leave this top side open. There's some people out there who really think that we haven't seen this top yet, that we're going to continue to move this thing higher, and are biased as such. And I'd say they're not wrong so far. I don't know if they're right quite yet, but they're certainly not wrong so far. So really, really interesting week. I'm surprised cash hasn't been a little bit more developed here on Thursday. I know we had Monday as a holiday, but boy, it seems like we're getting later and later in the week before we get cash developments, and that just might be a sign of high prices too.
Good points there. All right, Bryan, how about the dairy market? What do you see going on there this week?
We got green on the screen, and cheese prices are hovering in an area where the futures market, in theory, could work up to that area. And I'm talking the mid $18 to $20 mark. Hard to get bullish beyond that. We've got today, you've got October up 22 at 19.17. So back above the 19 market, it went up to that level and bailed off. And you've got we call a strip, which is the third quarter price, which is the October, November, December. You've got an average price there at 18.96. So we're really close to 19, and we did peak 19 a couple of weeks ago. So it's nice to see that market bounce back. What I am hard pressed to believe is that the market's ready for $20+ milk. So over this 19 area, I would encourage consumers to really think about or producers, excuse me, to really think about whether consumers can absorb higher priced products along with everything else. Gas prices going up. Things are getting a little sticky. Same thing for beef. Can the consumer continue to chase beef? And so, supportive milk, but not bullish milk, if that makes any sense.
Makes sense to me, Brian. I think that's a good spot to wrap it up here today. Real quick before we let you go, though, anything you want to reiterate or anything final you want to mention to folks on the show today?
Well, one thing to mention is we're gearing up for harvest. As you said, things are dying down or drying down or both pretty quick. So can't stress it enough. I guess as they get a little bit older, become a little bit more of a person who's worried about safety. So safety first. Take it easy. Yeah. The work will get done. Markets, a lot of movement. So we'll start backwards. Milk, good prices. Cattle, good prices. Feeder cattle, got to talk about that if you're a buyer or seller. Good prices if you're a seller. Hogs are trying to rebound some here. Grains look soft yet. So think about how you want to manage this going into harvest and your workload and your marketing. As usual, now is not the time to bury your head in the sand. Now is the time to pay close attention.
Brian, if folks need some advice, they can reach you and the folks there at Total Farm Marketing very easily. How can they get a hold of you?
Yeah, best way, Jesse, is just give us a call, 800-334-9779. Happy to take your questions or comments or constructive feedback. Any of that's good. Communication is good. There's always a positive in that. Email Brian with a Y at totalfarmmarketing.com or our website, www.totalfarmmarketing.com.
Fantastic. Bryan Doherty with Total Farm Marketing. Have a great one, sir. Thank you for the time. We'll talk to you next week.
Always a pleasure. Thank you, Jesse.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.